Hey folks, Dan Frio here, the Mortgage Update. Today is August 20th, 2020. Today we're going to go over what's going on with mortgage rates. That's why you're here. And I got some indexes. We're going to start creating a blog on a weekly basis to kind of give you guys what's the factors that go into mortgage-backed securities. That's the component that we follow, and we're going to get there in a second. But I'm going to go through the main things or main economic factors that affect or make the biggest impact on what's going on with mortgage-backed securities. So without further ado, let's get to it. So today we like this number. It beats being in the negatives. So MBS market is up 2. What does that mean? Well, the price of mortgage-backed securities, the bond, has gone up. Thus, dropping rates, dropping yields, dropping mortgage rates. So basically how it works is, in this easiest format I can give it to you, is as prices go up in the green, rates go down. So we love the green and we love the up. As prices or the number in this, the thing that we follow is red, that is down, that's bad, because that means rates go up. So red means rates are going up. Green means rates are going down. So we like green, okay? 2 isn't a very big move. Basically, it's nothing really happened today with rates. Again, let me recap a few things. A lot of the media, they gauge what happened with mortgage rates. They take Monday and Tuesday of each week, and then the following week, they compare Monday and Tuesday from what it did the previous week, Monday and Tuesday. Okay, pay attention to that closely, because a lot of the data that they start publishing, because they have to write it, edit it, and do all the other stuff, starts to get posted Wednesday, Thursday, Friday. So it could possibly be Thursday or Friday where they say, hey, rates are better than they were last week, even if we got crushed on Thursday and Friday. Because again, the data is a week behind on the mainstream media. I follow it every day, all day, meticulously, and that's my charts right here. That's why if you're a realtor, mortgage advisor, if you're in the real estate business, if you're looking to refinance, watch the channel. You don't have to watch anything else. Just follow the channel, and I let you know exactly what's going on with mortgage rates. All right, that being said, this number is a +2, which is good. It's basically flat, okay? So these lines through here, these are the technicals that I follow. Today, I'll take today. The flats, I hate these reds. This was a bad day. And if you go back just not too far ago, or not too long ago, look at this bloodbath. Crazy. And then we came all the way back pretty much to where we were. So if your mortgage advisor or your loan officer doesn't pay attention to this thing, they're panicking all the way down through here, like a lot of stock investors. And then they say, oh, it's time to get out. I'm going to get out here. And then they have a run in the market and they missed it. They do that old adage, they buy high, sell low. And that's what happens a lot of times, okay? So what I follow here, what I try to do the best I can of, is to track these. Don't freak out when these things happen, because anomalies will happen every once in a while. People will freak out, but a lot of times we sit on the sidelines. We're like, okay, we're going to wait here. If I see some technicals hit certain areas that I'm uncomfortable with, I'll lock. So we've been locking, we've been, very blessed that we've been locking at the perfect time for most of these situations, especially on pullbacks. So let's go through this real quick. This is what's happening in the price of the bonds. As it goes up, as we stated before, green is good, green is up, means rates are coming down, all right? When this goes down, rates are going up. So it's flip-flop. Just remember that part of it, all right? So I try to watch technicals. The technicals there's Fibonacci levels, as that we call them. There's lines, this line, this line, this line, okay? You got to think of these lines as barriers, ceiling, floor, and we're going to trade in that area. Shorter term, we have another short-term floor here, so we should be trading in these areas right through here. All right, these other lines right here are moving averages. So this is a 25-day moving average, a 50-day moving average, and a 100-day moving average. So that's another kind of more micro area that we watch. So the other day I was saying, okay, we should be trading in this range here, which we are, but then you start throwing in these averages. And when we were right here, if you go back to my videos, I said we should be about in this range through here because I was breaking these two apart. I said we should be in this range here. That's where we went. And we went, unfortunately, in like a day and a half. So the rates went up probably about 0.25%. They've been teetering ever since. So they've peaked past this line a little bit, the 25-day moving average, but they're really not doing much of anything. They're staying right in that area, and that's what I am predicting. The Federal Reserve's doing a fantastic job of stepping in every day, buying between $5 and $7 billion with a B in mortgage-backed securities to keep these lines as stable or as steady as they can possibly be. All right. So that's what's happening with the technicals. We should, theoretically, we're right at an area where I'm comfortable right now saying we shouldn't really move much from here. We should stay stagnant in this area. Things that are going to affect these rates are, and we're going to go over that in a second. Well, let's do it right now. So I went to Investopedia, and I basically was trying to find out what makes the most impact on mortgage rates. Thus, mortgage-backed securities, because this is the instrument that determines or calculates mortgage rates. So when you go through here, a lot of times you'll hear me say, I threw a lot of the technicals out the window because right now we're in a pandemic mode, and basically, the government stepping in and stabilizing everything. But what we normally follow is inflation, the economic growth, so GDP, Federal Reserve monetary policy, what are they doing, and the overall bond market. And then down through here, the housing market conditions. So those are the areas that we focus on. I also focus on another area that is called the Cass Freight Index. And there is other analysts that follow this. So we're going to go over what happened today and some of the news in regards to these biggest pieces of the puzzle. What happened today with those numbers? So the stock market was up 46, so really not much of anything. But if you see a lot of the headline news today, a lot of companies kind of blew away earnings or went over the expected. And I still think the market is priced fairly, if not a little over expensive or overbought. So I don't really think the stock market's going to have a major move any which way here soon. If anything, it's going to have a pullback. That's what I'm thinking. So let's get on to the next thing is employment, because this is part of the economic growth of everything. There's 135,000 more people filed for unemployment. All right. But the scary thing is a lot of people don't take this part of the equation and don't focus on this or don't even have a clue what it means. The PUA. These are people that are collecting unemployment that normally would not be eligible. For example, if you're just you play a guitar at a restaurant in the evenings and you just get paid cash or whatever, you can't usually get unemployment. Well, with the new stimulus package, you can. Those people added 500,000 more to the continued claims. Okay, so the true employment or unemployment factor right now or rate is about 17%. That's pretty high. That's not as bad as you might otherwise expect because half the country just shut down and we continue to kind of stay shut down. Some bright spots in what's going on is the Cass Freight Index. It's basically tracks shipping, and it was down or fell 13.1% year over year, which actually was an improvement than what was expected. And it also was up 4.8% over the previous month's numbers. So shipping is starting to take off a little bit. So that's what we had today. So also, and these show you here, the initial jobless claims, they were more than expected. You go down to continued jobless claims, they're about even. But again, those didn't include the PUAs, the people that normally don't get unemployment, but that are getting it right now. And then the manufacturing survey was not good. And I think that's one of the reasons why it put a kind of a halt on what the stock market has been doing or doing. Let me show you the headlines that I was speaking about, where a lot of mainstream media and other pieces, they'll say, rates are better today than they were, last week. Well, it's lender to lender, and there really isn't much of a difference. You can see it here, and I post this at the end of each day so you guys can read it. There's a lot of data in here. If you're just an average consumer, home buyer, home refinancer, I wouldn't go, unless you really get into this. You don't really need to dive into this stuff. If you're a realtor, mortgage advisor, financial planner, anything in the real estate market or business or investments, you should know a lot of this stuff. And, education is power. So you can see mortgage rates are actually lower this week. Not really. I mean, if you go back, we're here. Last week was here, or actually through here. So again, if it's down here, that means rates are higher than here. Well, if you go back to last week, we were lower than we are now. Okay, remember, it's flip-flopped. Okay, so that's that news, and I went through everything that affects the biggest effects of mortgage rates. So what I'd like to ask you to do, I'm going to ask you one favor. If you like my video and you like what you see, please don't forget to subscribe. Give me a thumbs up. That's all I ask. Subscribe down below. I'm trying to hit 10,000 subscribers. We're at about 30, 40, 50 a day. We're at like 9,500. So I need 500 new clicks by the end of the month. Please help me out. Click in there, even if you don't. Just click, make me happy. Click the bell. I try to have my titles relevant. I post every day what's going on with mortgage rates. So I don't know. You guys tell me, do you want me to put the date on there, or do you just want to see date published? I can put on there the mortgage, what are 30-year mortgage rates today, and put the date. Be more than happy to do that if you think that would be helpful. If not, you can just see the date it was posted, and that'll guide you through. Another thing I ask a lot of people to do, and I got about 10 of them today, is if you're in the mortgage process right now, please get a second opinion. All I ask you to do is email me a copy of one of a couple different things. Just one of them, though. Your loan estimate, fee worksheet, fee breakdown. What this will give you. Some companies, we can't issue a loan estimate unless you put in an application. I can give you a fee worksheet. What it is it gives me the loan amount, the value of your home, the interest rate, the term, and any fees that are incorporated in that. That's the easiest way. We're gonna match them up and say, okay, their rate is X, my rate is this. Their fees are this, my fees are this. I was beat by one company today on a rate, but my fees were about $3,800 less. So I told the client, I said, what do you want to do? I mean, if it was me, the difference in the payment was like $10. It would take you basically the whole life of the loan to recoup or recover your costs. So I should end up beating that one as well. So that's what I do. If you need to get pre-approved to buy a home, I can do that really fast. I have 8 loan advisors and myself, and we're on this all day, every day. All I ask you to do is go to my website. It's therateupdate.com. And you can go down here, see my phone number. It's 844-775-LOAN. That's 844-775-5626. Or you can click up through here, home purchase, home refi, get a rate quote. Or if you're like, Dan, I just want to get this going because I just want to close as fast as I can and get saving money now. Click up here to the Apply Now button. It's going to take you about 5-10 minutes. At the end, it's going to ask you for a few things to drag and drop into the file. Once you do that, give me an hour or two to review everything, and then we'll call you back and go over all the numbers, all the questions, and everything you got. So that is it for today. I hope you like what you see. And like I said, if you would, please don't forget to give me a thumbs up, subscribe down below. God bless. Have a great night, and I will see you tomorrow, God willing. Same time, same place. Bye-bye.